Congo, DRC, joining equity in the market that now appears to be a magnet to Kenyan corporates. This comes after acquiring DRC lender Trust Merchant Bank, TMB, in a deal that will see it expand its asset base to 1.26 trillion shillings, just 10 million shillings shy of equity's 1.2 trillion shillings by the end of March. Now, this deal opens up another battlefield between KCB and its main competitor, Equity Bank, which made its way into the DRC in 2020. Kanzo Jaffa examines why Kenyan banks see DRC as the place to be.
The KCB Group has entered an agreement to acquire 85% stake in the Trust Merchant Bank, TBM, in the Democratic Republic of Congo. The entrance into the Central African country, with a population over 84 million people, will mark the seventh market outside Kenya for KCB. With this new move, KCB will take competition with Equity into the new territory. Equity already has a presence in Congo after it purchased a 66.5% stake, which is currently the most profitable in the region after its profits jumped 147% for the financial year ended 2021. KCB is now looking beyond borders, seeking to tap opportunities which are driven by rapid economic growth in the mineral-rich country. KCB will look to foster its regional business with this new acquisition after acquiring Atlas Mara land in Rwanda, a move that saw its assets grow by 15%. However, the bank's intention of acquiring African Banking Corporation Tanzania, also majority owned by Atlas Mara, did not bear fruits after Tanzanian authorities threw KCB's bid into disarray. KCB has also acquired National Bank of Kenya in an expansion spree that has become the trend for Kenya's big boys in the industry. The transaction of TMB is expected to close by the end of the third quarter of 2022, subject to regulatory, shareholders and other approvals. What will be the outlook of KCB in DRC?
First of all, I believe it's a good move considering just the general or overall trend of the banking industry, where we're seeing the major players try to increase their stake in Eastern Africa. So a good example being Equity, who are sort of like the first Kenyan bank in DRC. So it's sort of just trying to keep up the way the industry is moving in terms of expanding asset base and widening their reach in Africa. The main reasoning behind that, given the country's sort of stake or share in terms of mining, but they do a lot of copper and cobalt mines. So the businesses involved in these two major mining industries, I'd say, sort of transact a lot. So in a way, this would help these banks sort of expand the exposure into the mining industry in Africa. So I'd say it gives them an opportunity to widen their asset base. So I believe this will give them a bit more stability, given that they're sort of diversifying their portfolio. So whereas you have banks who are normally just based in Kenya alone, if there are any significant shifts or risks in the market in Kenya, those might fluctuate quite a lot compared to maybe Equity or KCB in this case, which is a bit more diversified. So if maybe factors around Kenya affect the share price, even it's spread into other East African countries, I'd say the value of the bank sort of remains a bit more stable.
Kazo Jefwa, Look Up TV.